We're going to monetize the asset side of the U.S. balance sheet for the American people.
President Trump's executive order for a U.S. sovereign wealth fund will require the country to raise trillions of dollars, and fast. The biggest sovereign wealth fund in the world is Norway's, worth $1.8 trillion. It's run by Nikolai Tangen.
We have invested in 9,000 companies around the world. We own 1.5% of all the equities in the world. I think you need money to set it up. I don't think it makes sense to borrow money to set it up.
It's mostly countries that run a surplus, that have excess cash to spend, that don't need to deficit finance or debt issue to finance their deficits.
Mark Cabana is the head of U.S. rate strategy at Bank of America.
And the U.S. does not meet any of those categories. So it would be fairly non-traditional across the countries who are utilizing sovereign wealth funds today.
Former tech investment banker from Morgan Stanley, Michael Grimes, is tasked with setting up the new sovereign wealth fund. One of the administration's suggestions to raise the money needed is by monetizing the country's balance sheet. So, what is on that balance sheet?
Well, the Treasury Secretary has talked about this, certainly said that the current administration does want to try and monetize the balance sheet to use all available financial resources. However, we struggle to understand exactly what would want to be monetized on the balance sheet.
As of the fiscal year ending September 2024, the U.S. balance sheet shows total assets of $5.6 trillion coming from cash, property, investments, and inventory. Also on that balance sheet, 8,200 metric tons of gold, valued at about $765 billion.
So there is a relationship between the Treasury and Fed that has set the price of gold essentially 9 times lower than where the market is today. And there is discussion out there about the possibility of remarking gold to current value to then generate additional resources that the government could utilize. Seems pretty easy and clean in one respect. However, we believe it's going to be a bit more complicated in practice. Current law suggests that Congress actually sets the statutory rate on gold. So Congress would have to be the ones who decide to accept a remarking of gold. And we are not sure that Congress would necessarily want to do that in order to allow the government to have more resources that essentially don't need to be paid for with deficits or higher Treasury issuance. That would free up, it would essentially create money to be spent in the economy, almost in ways similar to QE. And in an environment with still elevated inflation and some signs that inflation expectations are ticking up, we are not so sure Congress would want to move in that direction. Now, if they choose not to monetize gold on the government's balance sheet, then if you look at what other assets could be monetized, they generally take you mostly to land, property, and other natural resources.
Plus, if you're talking about remarking gold, the technical way of getting that money to the Treasury goes through the Federal Reserve. You raise the risk of the Fed being seen as politicized, and you raise the risk possibly of inflation. Absolutely.
It would essentially impact the Fed's balance sheet in very similar ways to how QE impacts the Fed's balance sheet. However, in contrast to QE, you would have the asset that's changing not be securities holdings on the asset side of the Fed's balance sheet, but you would have it be gold that is increasing. And then if gold does increase, then other liabilities on the Fed's balance sheet would naturally need to grow. Those would presumably be commercial bank reserves, cash that commercial banks hold, or cash in money markets in the overnight reverse repo facility. Either way, it essentially grows the size of the Fed's balance sheet, it grows the money supply, and then that does mean that there are greater risks that it could stoke inflation. It certainly gives the government more resources to go out and spend on whatever it might want to spend on, or to help finance the deficit if there's lower revenue growth due to a reduction in taxes. So yes, it runs the risk of being inflationary, and we doubt that the Fed would be terribly comfortable with that, given where inflation is today and where some measures of inflation expectations are going.
President Trump has another idea to monetize the balance sheet. He's suggesting the government can sell off its federal buildings and properties, which fall under property, plant, and equipment, coming in at around $1 trillion on the balance sheet.
We could see a case where they might sell some government buildings that are not being utilized, especially with some of the other changes taking place in federal employment right now. But it's hard for us to envision what else could be monetized beyond that. Might they sell land that the military is using? Possibly, but presumably the military is using that for good reason. Could they sell other natural resources or treasures like the Statue of Liberty? I hope not, but that is a theoretical possibility. So we're just not really certain what else they would sell, but if you're not going to remark gold, then there are very few other options, we think, for them to monetize the asset side of the government's balance sheet outside of maybe selling some buildings.
Is there a reason we would necessarily want to run a sovereign wealth fund to do these kind of investments instead of just doing the investments, say, through the International Development Bank or something like that? There've been talk for years about an infrastructure bank, that sort of thing.
Sure, or doing them through Congress, having Congress appropriate funds for these types of purposes. Why would you utilize a sovereign wealth fund for that? Well, presumably because it gives the individuals who are overseeing the sovereign wealth fund more flexibility as to where investments can be made. And presumably it would be done in a way that does not require as much congressional authorization or potentially oversight. So it's just a more degrees of flexibility, I think, for those who would be overseeing that fund.
Salar Ghahramani is a professor at Penn State University who's done some research on what a U.S. sovereign wealth fund would mean for the U.S. Well, the sovereign wealth funds we hear about all have wealth. They come from locations where there is mineral wealth or something that adds to the treasury. The U.S. has a big deficit. We don't have sovereign wealth at this point.
Yeah, it's interesting. There have been very, very few. In fact, there may not have been any sovereign wealth funds that were not created by some sort of a surplus. And as you just noted, we have a deficit and we have a national debt and no surplus. There might be creative ways to gather assets and put it into the portfolio of a sovereign wealth fund. But again, I would venture out and underline that word creative. So it may not be intuitive, but I think there are ways.
One major challenge that stands in the way of a U.S. sovereign wealth fund is the issue of the national debt, which runs $36 trillion deep.
One of the concerns about the proposed U.S. sovereign wealth fund is that is it the most efficient way to address the specific reasons for the creation of the sovereign wealth fund? For instance, if the reason is to be infrastructure spending, Congress has already allocated billions of dollars toward, trillions of dollars in fact, toward infrastructure spending. So yeah, there's a concern that creating a brand new bureaucracy to answer whatever the question might be, whether it's potential Social Security shortfalls down the road, whether it's infrastructure projects, would it make sense to divert the attention from paying for those specific projects and going through a brand new bureaucracy to address those issues?
But there might be some benefits to a potential U.S. sovereign wealth fund.
Ideally, if the long-term interests, financial interests of the United States is the primary concern and not so much driving geopolitical interests, and that can have legitimacy too. Infrastructure projects potentially addressing potential shortcomings of Social Security and so on could potentially be looked at as a legitimate usage of the sovereign wealth fund. However, there could also be the possibility that the sovereign wealth fund's primary purpose is not so much the long-term financial interests and the financial outcomes of the fund itself, but being in line with some other national interests, whether it's related to foreign policy or whatever else the case might be.
Where could a fund like that invest? Would it work to have it invest in the U.S., or would it need to go overseas to avoid conflicts of interest?
There are sovereign wealth funds that are created with specific legal mandates of asset allocation strategies and even the asset classes in which they can invest. Norwegian legal mandate, for instance, for the Norwegian sovereign wealth fund is as specific as saying that no more than 5% of the fund's assets can be invested in asset class X. And there are also percentages specifically designed around areas of geography. So ideally, there should be a legal mandate, transparently discussed, that limits, that puts at least constraints on what the sovereign wealth fund can invest in. Ideally, a good sovereign wealth fund would be diversified across geographies, across asset classes, across even external asset managers, which is something that many sovereign wealth funds employ.
The idea of a sovereign wealth fund is not new to the 20 U.S. states that have sovereign wealth funds, including Alaska.
It's a way for Alaskans to store their non-renewable resources, especially oil, mining, minerals, et cetera. And so in 1976, the state legislature sent to the people of Alaska a constitutional resolution to constitutionalize the concept of a permanent fund in our Constitution. And that was successful. The permanent fund was born in 76. 1980, the permanent fund dividend came into being. This is all as a result of oil that was discovered in Alaska and some really, really smart people that had a lot of foresight. The fear was that we would spend all of our oil money and we wouldn't have anything for future generations. What the permanent fund does is it captures the royalties of oil and minerals and puts them into a constitutionally protected fund. That fund is called a corpus. It is invested into equities, private and public equities, real estate, et cetera. And the idea is to continually grow the fund so that over time we'll have a fund that can help future generations of Alaskans. At the same time, paying out a dividend every year to current Alaskans. About 640,000 Alaskans will receive a dividend this coming year.
Just because it's a good idea for his state, that doesn't mean Governor Dunleavy sees a similar path forward for the federal sovereign wealth fund.
I don't know if it makes sense to borrow money to put into the fund, but I think what the federal government can do is something similar to what Alaska's done, and that is royalties on federal lands, whether it's oil, whether it's gas, possibly timber, mining. Any income that's produced on federal lands could actually have some of that go into a permanent fund and grow a permanent fund just like Alaska has. So especially when you're looking at non-renewable resources, oil and gas, it may make sense. And there is a lot of federal land. There are a lot of offshore leases, onshore leases potentially. And so, it is something to think about. We're proud of the permanent fund because once again, we know that we have saved a considerable amount of money for future generations.